So guys, welcome to another video. Today we're going to be doing the second episode where we find out whether ChatGPT can outperform the market. So this has been a really interesting week, I'm not even going to lie. So the whole debt situation within the US literally caused stocks to plummet as soon as I brought this pie at the start of the week, as soon as I made the last video in fact. And then obviously at the end of the week it came out that they were close towards a deal. So let's look at this article, which basically explains the situation in a couple words. So it says stocks rally Friday on hopes for a debt ceiling deal. Nasdaq notches fifth straight week of wins. So this basically means that the tech stocks actually went above and beyond in their recovery and actually blew past it, and that means that the stocks within our pie, which are tech stocks, are literally up right now, whereas that price movement at the start of the week didn't properly recover for other stocks, which means they're slightly down. So with that, let's have a look at the pie. So guys, we are down at £4.21, so 0.84%, and that's really not bad, if I'm honest. There's not been an update at this moment, but let's have a look through the holding. So at the top, you can literally see Microsoft and Apple, and this is where what I said with the tech stocks doing well. So Apple's been doing really well in this dodgy economic climate where everything's been going down for almost a year now. Apple has, withheld the storm really well and held its price points. Microsoft just literally rallied because I believe it's to do with the acquisition, and obviously they're very strong on AI, so that's why there's a lot of bullish sentiment about Microsoft. And obviously they're diversified so much right now that a lot of people believe that they're almost an ETF themselves, because they just like anything that becomes popular or has a bit of success, Microsoft buys it. So Pepsi went down. I'm not sure for this price movement, but it's only 1.59%, so easily recoverable. Alphabet Class A, so this is Google. I would have thought this would have been up, as I said, for tech stocks, but we are just slightly down on it, but literally 2p, so not that much. And this takes us to our biggest winner of this week, AMD. So a few videos ago, I actually said that I think that AMD is a brilliant stock to buy. I ended up selling it because it literally rallied 20%. But I'm glad that this pie gave us exposure to the stock again, because it obviously brought some, and it means that it rose another 20% since we brought it. I think that AMD and Nvidia are really strong stocks to hold because of their link to AI and that sentiment at the moment. So yeah, this one has Procter & Gamble, always a very strong stock to have, because they've just got so much exposure to the consumer market, although this is down 2.31%, but nothing really major. Raytheon Technologies, I actually don't know, but McDonald's, obviously they're massive, more of a real estate company than anything else, although obviously everyone knows they sell food, but more of a real estate company because they basically buy the buildings and then give them to franchises. But yeah, a really good long-term hold tends to be for Golden Arches, and yeah, there's nothing to be worried about there. So as you can look, it's all pretty much little small losses, so nothing to be worried about at this moment, because they could recover within a day. But I will be getting into our biggest loser, but before that, let's have a look at Pfizer. Pfizer's a really good, actually, dividend stock to hold. I haven't got it within my portfolio outside of this because I actually went for GSK instead of Pfizer, but they both pay a really good dividend, a really good holds long term. But yeah, this one seems to be up at the moment as well. We've then got Comcast, which I can't say I'm familiar with, if I'm honest, and it tends to be, looks like it's one of the bigger losers at 4.38%. And down £1, which is quite a bit with the amount we've actually got invested in each pie. We've then got Netflix, which is up almost £1 though. Although honestly, I hate Netflix. I just, every business decision they've made within the last year, I've disagreed with, and I just think they're just trying to ruin what made them popular. So outside this pie, obviously I'll hold them in here, but I would never hold Netflix within my own personal holdings. We've then got Starbucks, which is down £1, but then I also hold this in our almost daily dividend series. If you want to literally go and watch that, I'll stick it here. but really, I think it's just literally decreased because I've been in profit with on Starbucks for most of the year, and long term, I think they're a decent company to hold. T-Mobile, so I'm not a really big fan of holding mobile stocks, but as I said, this is a test, and yeah, it's down at the moment, but only by little bits, only little losses really. Like as you can see, all these are recoverable. Lilly and Co. It's funny this one's actually in the pie because I do like this stock. I actually brought it on another stock exchange, which I won't say the name of because I've actually sold my holdings just because of policy changes on that app. I wasn't very happy with it. I know there's videos on it out there. So I decided to get rid of it, and I haven't reinvested it inside Eli Lilly and Co. But I did do a lot of research when buying it the first time, and I do really like the stock. So the other stocks are just like riskier choices, which I'm not going to go too far into, but I will really go into Dollar Tree because that is our biggest loser of the week, minus 2.62%, to 10.43%, £2.62 down, and this is because they majorly missed earnings. So yeah, they majorly missed earnings, making the price plummet. Dollar Tree is not a stock I would hold either if it was my own choice. So it'll be interesting to see if that one recovers. But obviously, the the pie would be looking much worse if it wasn't for AMD, because if you put those two together, AMD is actually outperformed on the wins, then the top loser has outperformed on the losses, and then the rest just seems to be very minor losses which have just added up. So really nothing major has happened within this pie. Yeah, that Dollar Tree is a bit of a stupid decision, but no, it's really interesting to see. It's not like ChatGPT has absolutely messed it up, because it has been a really difficult week on the stock market with a lot of volatility with that last minute pump. As I said, that massive pump happened mostly to tech stocks, which is shown within this pie. But all this pie is saying basically is that the ones which aren't tech stocks are still slightly down because of that mess which happened at the start of the week. But yeah, guys, I hope you guys did enjoy this video. Please leave a like and subscribe. If you guys want to use my link to sign up to Trading212, we both get a free stock between £10 and £100. I will leave that link in the description, and I'll see you guys next time. Peace.